Good morning to all of you. Good morning.
Good morning, sir.
Morning.
Okay, welcome to our class. So here, there's a topic that I had missed out. This should be, it ought to have been like topic 4, okay, what's referred to as the management responsibility and performance measurement, okay. Management responsibility and performance measurement, okay. It's quite an easy topic, okay, not that it is complicated, okay. Now, in this topic, what shall be discussing, being what we'll call the responsibility centers, okay. Centers, by responsibility center, what do you mean by that is that it is possible to hold someone into account on how the center, okay, in this case, it will mostly be a department, on how the department is performing, okay. That's what we mean by a responsibility center, okay. So we shall discuss, therefore, the different responsibility center, okay, in a company, okay, and how, or the different measures, okay, the different performance evaluation, okay, criteria we can use to assess whether the center is doing well or the center is doing poorly, okay. That's what we shall be discussing here. We discuss what are the different responsibility centers we can have as a company, okay, and what are the different measures we can use in attempting, okay, to evaluate how the performance of, okay, that particular center, okay. And as I mentioned, we are going to the center is, if you can say that if a center has, in quote, the head, okay, someone who is going to be at the end of the day be asked to account on how the center has performed, okay, where there is someone who is responsible, okay, on his performance, okay, then we refer to as a responsibility center, okay. There's going to be a manager, okay, going to be responsible for that particular center, okay. So we discuss what are the different centers you can have in a company, okay. Then we discuss that. Once we measure the centers, we discuss what are the different performance measurement we can use to evaluate how this particular center is performing, okay. Is it doing well? Is it doing poorly? Okay, we discuss the different measures we can use to evaluate how it is performing, okay. That's what we're discussing in this topic, okay. An easy one for sure. As I mentioned, the response center, okay, most likely be a department where there's someone who is going to be responsible on its performance, okay, on its performance, okay. Therefore, at the end of the year, okay, in quotes, okay, someone will be asked, okay, or the manager most likely be asked, okay, how has your department been performing, okay, either, for example, on how many units you as the manager of production department, how many units you have remote produced within this year, what's the cost you have been incurring in producing those units, okay. So there will be, okay, a case where you will have to account, okay. There'll be someone you'll be asking to account for, okay, on how you have been performing, okay, in the last maybe 1 year, in the last 1 month, in the last 1 quarter, okay. There'll be an accountability, okay, system already put in place, okay. So a response center is a function or a department of an organization that is headed by a manager who has direct responsibility of its performance, okay, or for its performance, okay. I think we did mention this, okay, that at the end of the day, okay, that is going to be a department, okay. However, there will need to be someone who is going to be, in quote, the head of that department, okay, who will of course therefore be answering in quote of how the department, okay, has been performing for the last maybe the last quarter, okay, of the last 1 financial year, okay. That's good, therefore a response center. If there's no manager, okay, then that's not a responsibility center, okay. If there's no manager, that's not, therefore it can be a center, but it's not therefore a responsibility center, okay. If there's no manager and there's no accounting on how the company has been performing, okay, then that's not a responsibility center, okay. The center is going to be a responsibility center if there's a function, a department, okay, where there's a head of that department and they are responsible, okay, of how the department is performing, okay. Maybe in terms of cost control, okay, and maybe in terms of income generation, okay, in terms of the investment they're making, okay, they can be someone who can be responsible of the performance of that particular entity, okay. which therefore, as I've just mentioned, okay, at the end of the year or at the end of the quarter, okay, then the manager will put into task, okay, using the different performance evaluation measurement, okay, to evaluate how he has been performing, okay. And of course, definitely it's prudent, okay, that a company you're going to be issuing these managers with their targets, okay, not as target as per se. You're going to be informing them that hey, your performance evaluation is based on the following. Before the year begin, you tell them, you as a manager, at the end of the year, we are going to deem you to have performed well if you do A, B, C, and D. Okay. You as a student, okay, by the end of the course, you'll be doing an exam. How do you know you have done well or not? If you achieve at least half the marks that the examiner is presenting, okay. Therefore, then the person need to be directly responsible for the performance. Okay, then to be directly responsible for the performance. Okay, so therefore, at the end of the period, okay, the end of the year, the end of the quarter, the end of the month, okay, they already know before it begins that hey, my performance is based on the following criteria: A, B, C, and D. Okay. Therefore, the performance measurement tools, okay, or systems that is going to be put in place need to be communicated in advance, okay, to this particular manager, to this particular person in charge of the particular function, okay. So if the performance of the department, the performance of the function is beyond the control of this manager, then that's not a center. That's not a responsibility center, okay. If the performance of this department, the performance of this function is beyond the control of this particular manager, then that's not a responsibility center. The performance need to be within the control of the manager, okay, for the center to qualify to be a responsibility center, okay. Okay, I hope that's clear, okay. When it comes to student accounting, there's a system of accounting that segregates revenue costs into areas of personal responsibility in order to monitor and assess the performance of each part of the organization. Okay, as I have mentioned, don't forget it's worth enough that as a company, okay, you don't want to be in code be unfair, okay, to the different managers, okay. Therefore, you need to have set criteria, okay. You need to have responsible accounting, okay. That you, as the manager in charge of the marketing department, okay, you're going to be assessing your performance, okay, based on one, the amount you have spent in the last one financial year, okay, in terms of marketing of commodities, okay, how many items, okay, have we been able to sell as a company for the last one financial year, okay, or even how much money have you spent in terms of the marketing, okay, and which areas have you spent in the cost of marketing, okay, you spent towards advertisement, how much, okay. We compare what was your actual expenditure versus, for example, what was budgeted for. Okay, did you go beyond the budget? Okay, if we are marketing a new commodity, okay, how successful has this commodity been in the market? Okay, we are launching a new product. Okay, how did the market perceive of this particular product? Okay. So there'll be you as a manager, okay, as we are saying, you need to know this particular. You need to have known, okay, how you'll be evaluated on how you're performing, okay, way in advance, okay. There need to be communication that this is how you be assessed, okay. And definitely don't forget, for the case of accounting purposes, okay, for the case of accounting purposes, okay, don't forget what really matters is going to be the cost and the revenues, okay. Is the cost about the revenues, okay. If, for example, is about the cost, okay, as you've just mentioned, you as the head of the marketing department, okay, the cost or the amount you have budgeted for marketing, okay, towards, let's say, the radio as well as the TV was, let's say, 1 million, okay. Then at the end of the year, we compare, okay, how much did we spend towards advertisements through radio as well as the TV, for example, okay, is equal to X amount of money, okay. What was the budget? Okay, what was the actual, okay. Did you go way beyond the budget? Okay, and if you did, you went beyond the budget. Okay, was it approved? Okay, by the committee for budgeting? Okay, so all these are the criteria. Okay, need to be known in advance. Okay, on how you as a manager you'll be accounting, or rather you'll be responsible. Okay, on the performance of your department. Okay, and as you mentioned, don't forget you. As a manager, okay, you as a manager as well as a department, okay, you do need to have a control, okay, of how the function or the department is performing, okay. If you don't have any control on how the department is performing, then that is not therefore a responsibility center, okay. You need to be in direct control of how the performance of your department, okay. Otherwise, then that's not a responsibility center, Okay, I hope it's clear to all of you. There are a number of centers. Okay, we have a number of centers. The first one being what we call the cost center. Okay, one of the responsibility center is called the cost center. Okay, now in the case of the cost center, okay, in the case of a cost center, this is where you're going to be having this particular department. Okay, as per se, it incur expenses. However, it is not able to generate revenues. Okay, this is going to be a center where it only incur costs. Okay, and there's no any revenue, there's no any income that it is able to generate. For instance, okay, in most organizations, accounting department is a cost center. Okay, it does not go outside of itself. Okay, and attempt to earn money for the organization. Okay, let's take a simple example. Okay, of let's say like Stanford University. Okay, it has an accounting and finance department. Okay, do the accountants make any money for the organization? They don't. Okay, if anything, they're accounting on what is going to be their service center. Okay, on behalf of the university. Okay, as per se. Okay, so as per se, they're not involved directly in making money. They don't make any money. Okay, we can't say at the end of the year the money that the accounting department has been able to make is X amount of money. They don't. Okay, there is more of a cost center. Okay. Maybe in the case of marketing department, okay, for most marketing department, they don't earn any money, okay. So their main work is to advertise the service and the product the company is manufacturing, okay, is providing, okay. So they don't, as per se, directly earn money on behalf of the organization, okay. So therefore, they're going to be cost center. They only incur costs, okay. Therefore, they're deemed therefore cost center. Okay, they pay the employee. Okay, they may be doing research. Okay, so all these costs therefore, okay, become therefore their costs as per se, but there's no money that they're going to be earning on behalf of the organization. There's no any income generated from these departments. Okay, we refer to them as therefore as a cost center. Okay. Don't forget, as I mentioned, the cost need to be attributable. Okay, they need to be just let me just highlight this term here. Okay, yeah, that is possible that cost can be separately attributed to this particular center. Okay, that as the finance department, okay, we can be able as an entity, okay, to say that the amount of cost you incurred as the finance department is equal to X amount. Okay, we paid the employees, the accountants you have, we paid for the research costs you did incur. Okay, you as a marketing department, this is a cost that you incurred in advertising for our services or products. So the cost need therefore to be directly attributable, okay, to this particular center. Okay. A cost center is a production or service location, okay, function, activity, or item or equipment for which costs are accumulated. Okay, don't forget, as mentioned, there'll be what we call cost accumulation. Okay, that each of the department, okay, at the end of the day, okay, the main basis of assessing how it is performing, okay, the main basis of assessing how it's performing is by doing cost accumulation. Okay, don't forget here, there's no income. Okay, there's no any income that this particular department is earning for the company. Okay, therefore, again, when it comes to the quantification, okay, of how the department has performing is about determining what the cost, okay, cost to employee, cost to research, okay, cost to marketing, okay, so it's about cost, okay, clear. Okay, don't forget in a question you may be given, okay, an example of department, and you're meant to pinpoint whether this department is a cost center or is a, for example, an income center, for instance. Okay, so you should be able to pinpoint it, okay, based on the nature of the department, the nature of the function that it does play within the organization. Okay. As I mentioned, the information about the cost center might be in terms of, don't forget, it's about the cost. As I've mentioned, okay, and maybe you can compare the actual cost, okay, versus the budget, the cost of the budgets, okay, or the budget cost, okay. If there's any difference, for instance, okay, we call it the variance, okay. Don't forget, variance occurs in the case where we do have what was budgeted, okay, was what was actually incurred is different, okay. So you saw yesterday, if you remember, the overheads, okay. The overhead that were actually incurred and the overhead that we were anticipating to incur are different. Okay, so you have a variance. Okay, you have a difference. Okay, there's a variation from what we are anticipating. Okay, therefore that's some of the way you can try to evaluate. Okay, how the cost center is performing. Okay, through the use of cost. It's about cost. Don't forget. Okay, the key term is about the cost. Okay, So at the end of the day, there's no any income money into the business that the department is going to be generating for the company. Okay. One of the ways that we are going to be using to assess how the centers, okay, not just the cost centers, okay, other centers, which we shall discuss it alone, okay, through the use of ratios, okay. This is going to be the one of the key way of trying to evaluate how the centers are performing through the use of ratios, okay, which we shall discuss in this topic. The use of ratios analysis, okay, to help us in determining how the centers are performing. Cost centers, for example, okay. Can use for example comparing just an example, okay, and it's very simple ratio. Okay, we can compare. Okay, you as the marketing department, what was the cost? What was the total cost as per year? Okay, it was, for instance, you incurred $10 million. That was the cost for advertisement. This is how much. Okay, it was, let's say, 15 million. Okay, therefore you can see your cost increased by 50% within 1 year. Okay, so the company therefore was there anything, or rather, did we increase our revenue, okay, by 50%? Because you as the marketing department, your revenues increased by 50%, okay? Therefore, in terms of our revenues as a company, okay, did our revenue increase by 50%, okay? Or is it worthwhile, or was it worthwhile for us to incur an extra $5 million, okay, or not, okay? So we can make a comparison of, for instance, the cost in the previous year was the cost for the current time period, okay? That's the issue we're using, okay? Just the example of cost centers, okay, there can be a department, okay, as you mentioned, because there's some departments which I think I've given an example, okay. One of them be, for example, finance department in most company, okay, the finance department for most company, even some case of marketing department, okay, they are going to be cost centers. They don't earn any money, okay, as per se, okay. Therefore, this department, therefore, okay, become therefore only cost center for the company, okay. Machine group machines also they can be deemed as cost centers. A project, okay, can be a cost center. A new product that's being launched, okay, can be a cost center, and even a person, okay. For instance, the office of the CEO, okay, the office of the CEO in itself is a cost center, okay. It's not, there is no money that, as per se, we can say that the CEO is going to be earning, okay, for the entity, okay. That is, you can say this is the amount of money as a company we have made because of the CEO, okay. There's none, okay. You can't attribute any revenue, okay, to the CEO, okay. Therefore, the office of the CEO, therefore, as per se, therefore, is simply a cost center. Okay, it's simply a cost center. Okay, don't forget you need to pay the CEO, personal assistants. Okay, the space they occupy. So at the end of the day, the cost you incur in quote maintaining this office. Okay, which there is no any revenue that is going to be, there's no any direct revenue and because of the office of the CEO, for instance. Okay. Therefore, the office of CEO therefore can be, for instance, a cost center, okay, as a person, okay, as a person, okay. So cost center is something that incurs costs as it operates. For example, factory, okay, I think I've mentioned this already, okay, that as the production continues, okay, there will be costs you'll be incurring along the way, okay. And there's no revenue, there are no incomes, okay, that is directly attributable, okay, to this department, to this machine, to this product, to this person. Okay, as per se, it's just a cost that is being accumulated, okay, in this particular department or a person, okay. Therefore, cost center is simply an accumulation, okay, is collecting place for costs before they are analyzed further. It's simply a place where the costs will be, okay. It's a collection of costs, okay, as you just said, okay. Give an example of the marketing department, okay. You pay the marketing director, okay, some money, the other staff that do assist in the marketing, cost of the advertisement, okay. So all this is about cost collection, okay. So as per se, on the basic, okay, analysis point, okay, it's about the cost and cost only, okay. Clear? Question?
Excuse me, I missed the previous slide.
Yes. So what do you want us to do?
You go back to that slide. I copy some last bits of it.
Slide 4.
Yes.
Okay.
I'm done.
Okay, so that's on a cost center. Okay, that's on a cost center. Okay, as I mentioned, uh, what is going to happen most likely in an exam situation. Okay, you're being asked. Okay, you're given some explanation that this or some details, okay, some information about a center. Okay, so it's upon you to determine whether this particular center is it the what term to use? Okay, this particular center, okay, is it a profit center or is it a cost center? Okay, so based on the information that is going to be given to you, okay, based on the information that is going to be given to you, okay. Then you have to call a profit center, okay. Don't forget you can have other centers which we refer to as profit center, okay. Now, in a case of profit center, okay, now for the case of cost center, it was simply cost accumulation, nothing else, okay. In the case of profit center, this center has it incur cost, okay. At the same time, they do make income. They do generate revenues for the company, okay. So there's a center that makes money, okay, for the entity. Of course, definitely it also incurs costs. That's for instance, if a company has an IT department, okay, if a company has an IT department, okay, don't forget they normally have to employ IT personnel, okay, in this particular department. If the IT personnel are also outsourced to other party, okay, they are also act as service department, okay, for external parties, okay. You have an IT department, okay, but is this IT department is not just for the entity, okay. These IT personnel, okay, they are normally some once in a while, in quotes, sent out, okay, to service maybe the clients, okay. Now, therefore, the IT department, okay, over and above having cost accumulation, okay, for example, they pay to the employees, also make money for the entity, okay. Another example could be the case of a canteen, okay. This canteen, okay, may be there to serve the entity, okay, so therefore there's cost the company to incur, okay, in the food, the beverages, okay, the refreshment they offer to the employees. But maybe also this canteen, okay, also offers or make sale, okay, to maybe other staff members. So in case maybe you go beyond your in quote allocated amount, okay, okay. If for instance you get every day that a company allocates to the employee, let's say like 200, okay, for lunch, or maybe 1,000 for lunch, okay. If an employee who wants to go above and above what is allocated, okay, they have to pay for it, okay. So it means therefore this canteen, okay, is a cost center, but it also makes sales. It also makes income, okay, from selling to either the members of the company or even to external people, okay, in case the canteen is open, okay, to serve external parties, okay, to serve external customers, okay. We imply that for this country, therefore, is making money, okay, for the entity and also incurring costs, okay. Don't forget the profit is given us. Get profit is simply equal to the revenues or the income earned minus the expense or minus cost, okay. So this entity is earning money, okay. At the same time, is also incurring costs or expenses in earning of those money, okay. We'll go therefore profit center, okay. They will refer to us therefore as a profit center, okay. The profit center is in a section of the organization to which both revenue and costs are assigned. Okay, it has both revenues as well as cost. Okay, revenue as well as cost. Okay, so that the profit of this section can be measured. It is possible for us to make an evaluation of the profit that the entity has earned over a given time period. Okay, simply by observing the amount of revenue earned, okay, and the amount of cost or expense incurred over a given time period. Okay. So therefore, if as a center earns revenue, there's some income it is able to generate, as well as there's some expense it is incurring. Okay, in generating these revenues. Okay, therefore that center become therefore what we refer to as a profit center. Okay, as a profit center. Okay, clear. For instance, okay, let me take the case of Stratham University. Okay, in the case of let's say school of accountancy, okay, like the school we are in, okay, don't forget it makes revenue in that sense, okay, from the school fees, because it charges students for school fees, okay, for the classes, okay, for the learning, okay. So they do have income, they do have revenues, okay, for the school, but the school also incurs some expenses, okay. It has staff members, okay, in the department, okay. Therefore, there are revenues that is earning, okay, but they also cost it is incurring along the way, okay. Therefore, it can therefore in quote deem it as a profit center, okay. Well, it makes money, but also it incurs expenses, okay. So at the end of the year, at the end of the quarter, it is possible to evaluate how it is performing based on the profit, for example, the department is able to make on behalf of the entity. Clear? Okay, great. An example of the department could be a sales division selling product to customers, for example. Service division providing services after sales service to customer, and they do also provide, they do charge customer for the after sales service. Okay, shop in a retail chain. Okay, so all these, go through them. Okay, so this is an example of profit center. Okay, and as mentioned, you have to be very careful. Okay, when it comes to the question to be tested. Okay, because you'll be given a department. Okay, it is upon you to determine whether this department is a cost center or is a profit center. Okay, as mentioned, the simple criteria is try to observe whether this department does it earn money. Because if it earns money, then essentially most likely to be a profit center. Okay, but in case it doesn't earn money, it's simply incurring costs. That most likely be a cost center. Okay. Then you go an investment center. Okay, another center of responsibility referred to as the investment center. In this case, okay, this center is also able to purchase what we call long-term assets. Okay, this department on its own, okay, without the need for it to consult with, let's say, the head office. Okay, it can be able to buy its own capital in investment centers. Okay, it can also be able to finance for its to source for financing. Okay, on how it will be acquiring these capital assets. Okay, long-term assets. Okay, assets that goes beyond one financial year. Okay. For most, okay, most the case of SMEs, okay, for most of them, don't forget the capital investment, okay, if they do require any capital assets, okay, it will have to go through the company, okay, head office, okay. You as a department, what do you need? You need computers, okay. You can't make that decision on your own, okay. So therefore, you'll be going through the company, okay, head office, okay. If you want new computers, okay. Therefore, as per se, therefore, you are not an investment center. If it is possible on your own as a manager in quotes, okay, to be able to make this decision without the need for you to consult, okay, not consult, okay, without the need for you to go through the head office, okay, then you're therefore becoming therefore an investment center, okay. Therefore, this center will be earning money, it will be incurring cost, and at the same time they'll be able to purchase or invest in long-term assets, okay. If let's say a branch, okay, can be able to buy motor vehicles, okay, on its own, okay, from the money it's able to generate, okay, the department, okay, this particular center, or the branch, okay, or let's say a bank, okay, can be able to buy its own capital assets, okay, without the need to consult to the head office, okay, then that's therefore an investment center. Then therefore is an investment center, okay. If it is making, it can be able, okay, to make its own long-term purchases, long-term asset purchases without the need for it to, in quote, consult with the head office, okay. So an example could be, in case we take the case of multinational, okay. Let's for example be the case of multinational, okay. The Coca-Cola Kenya, okay. There's some investment which it does not need to consult, for example, from the parent company, okay, in Atlanta. It doesn't need to consult, for example, when it comes to buying motor vehicles, okay. They want to buy the motor vehicles. They don't consult, okay, from the head office, okay, from the parent company. In that case, therefore, they become therefore an investment center, okay. It is earning money, okay, that one's for sure. It is incurring expenses, but at the same time, they are also able to invest money in long-term assets, okay, motor vehicle, or buying of buildings, okay, without the need for them to go back to the parent company in quote to ask for money, okay. I'll call therefore an investment center, okay. So the key difference between the profit center and an investment center is that this investment center, okay, is also able to make long-term decisions, okay, in relation to capital assets, in relation to the long-term assets, okay. That therefore means therefore by an investment center, okay. And therefore those are three centers that we are meant to discuss, okay. A cost center, profit center, and an investment center. Question?
Sure, I haven't understood investment centers.
Investment center, as I told you that this center is able to make money. Let's take example, case of Barclays Bank Kenya, okay, the ABSA now, okay. Does it make money? Yes, it makes money because they loan out to customer, okay. So their loans that they make, they loan out, okay, to customer. Therefore, they make interest income, okay. They are also able to, they also do incur costs, okay. They have employees, they have CEO, they have staff members, okay. They have their own operational expenses. So therefore, they make profit, okay. At the end of the day, they make revenue. They also do incur costs, okay. Therefore, they make this like a profit center. But over and above making profit, making revenues, incurring costs, they are also able to invest or rather make decisions, okay, when it comes to purchase of long-term assets. An example, okay, if ABSA, okay, but Kenya, okay, would want to acquire a new branch, okay, it doesn't need to consult with, okay, ABSA Africa, okay, it doesn't need to consult, okay, because in itself is an independent, okay, centers per se, okay, of the ABSA Africa as a group, okay. So this, since it is able to make a decision, okay, it can be able to purchase on its own capacity, okay, to purchase this long-term asset, okay, to open new branches, okay, to purchase motor vehicles, okay, purchase building if they need to, okay. So therefore, this center therefore can therefore an investment center, okay, if it is able to make those decisions, okay. But if, for instance, you take the case of a branch within the ABSA Kenya, okay. So if they are to open a new branch, let's say, I don't know where, in Mombasa, so they want to increase the number of branches there, okay. The branch itself, okay, of ABSA Kenya, maybe they don't buy motor vehicles on their own, okay. If they want a motor vehicle, they request the head office, okay, ABSA Kenya, we need a motor vehicle, okay. So therefore, they don't make long-term decisions. Therefore, they are more of a profit center, okay, because they don't make or they don't invest in capital assets, okay. Is that clear on the difference between the profit center and an investment center?
Yes.
Yeah, don't forget, as I mentioned, the investment center has an extra, okay, they can be able to make their decisions in relation to procurement of long-term assets. Assets that have life of beyond 1 year. Okay, simple example. They can go to open new branches. Okay, they can be able to buy motor vehicle. They can be able to buy properties. Okay, if they can do that without consulting in quote, okay, the head office, then we can, as per se, say therefore those are therefore what we refer to as the investment centers. Clear? Question? Okay, great. As I mentioned, don't forget that here you have to be quite careful, okay, because you'll be given, okay, more or less details regarding a department, okay, regarding a center, okay. It's a point to pinpoint whether this center is a cost center, profit center, or an investment center, okay, and it might not be so direct, okay. So you have to be quite, you have to use your own logic as per se. An example. So, this, what is this? Cost, profit, investment, sports center. Joshua?
Yes.
Mm.
Profit center.
Okay, this is a profit center. Okay, this is a profit center. Why? Because it is incurring costs. At the same time, is also earning money from sale. Therefore, this is profit center. Okay, sometimes it will not be too easy. This one is quite straightforward. Okay, sometimes it will not be too easy to pinpoint it. But in either way, okay, that's good. Question 2. Karen, give us the answer to question 2 as we're done. Karen. Hey, Karen is not in class. Karen Jevto. Okay, so in case I ask a question and you're not answering, then assume you're not in class. And I kick it off class. Karen? Not in class. James?
Cost units.
Okay, a cost unit. Okay, this is a cost unit. Okay, thank you, James. Look, this is a cost unit, okay? So in a garage, costs associated with each car that comes in for repair. The cars, therefore, are cost units, okay? I think you've done this beforehand, okay? As you can see, we have to be careful. This is not a cost center, okay? This is not a cost center. It's not a department, okay? These are the cars that you are repairing. These are called, therefore, cost units, okay? Great. Question 3. Ian.
Yes.
What's the answer?
Still working on it.
Hey. Ian, okay. J. Vasani. J.
Yes.
What's the answer?
D.
D. 1, 2, 3, 4. Okay, that is from J. Marvin, do you agree?
Yes, I do.
You agree?
Yes, B.
Okay, James. James.
D.
D. Okay.
D. Yeah.
Okay, the answer is D. Okay, okay, the answer is D. Okay, why? Because this is an investment center. So for definitely they do make investment. They buy long-term assets. Okay, this center incurs, it has revenues, it has money, it has costs, definitely it also makes profit. Okay, therefore she's responsible more or less of all those 4. Okay, great. So therefore that's on the centers. Okay, that's on the centers, all the way from the cost center to the revenue, to the investment center. Okay, but sometimes we can have a case where we have what called a revenue center. Okay, but it's quite unlikely to can happen where, in the case of the case of revenue center. Okay, revenue center. Okay, this way you're going to be having it earns money, but it doesn't incur costs. But essentially, I'm trying to work which department it earns money for the entity, but it doesn't incur costs. I'm not sure an example. Okay, that's why I have not included here. Okay, I would call it a revenue center. So these centers, they earn money for the entity, however, they don't incur costs. Okay, which I'm trying to say in reality, which department, which could be this. Okay, I seem not to get it. Or can you think of a department where it earns money, or a function that earns money for the entity without any incurrence of costs? I'm also sure, but I can't see any I can't think of a center where there's you doing you money, okay? Well, there's money you earn, but there's no any investment required out of it. I'm not so sure about it, but you can have it, okay? You can have a call revenue center, okay? However, there's no any cost that you do incur, okay? There's no any cost that you do incur, okay? So go therefore.
Excuse me, sir.
Yes.
How about the boardroom?
The boardroom. So in case a company has a boardroom.
Like the boardroom now, that's where they make the decisions on which projects to invest in, which ones to not to invest in.
Okay. Does the company incur expenses for having the board?
No, it's just a room where they're told they go and meet there at like 2 p.m. to make the decision on the investment, and then they go home.
So you're saying the board members go and meet? I want to get you clear. Board members.
Yeah, the boardroom.
Or the room itself as a boardroom.
Yes.
So the company has a boardroom that it hires out or what? Let me get it clear.
The boardroom is there, and now from the boardroom, that's where important decisions are made concerning investment. So the boardroom becomes the investment center.
Okay, you count the investment center. Okay. Okay. So the board itself, there are two things: the boardroom as a room, as per se, the physical room, and you have the board members who go and meet in that boardroom. I want to get it very clearly. Which is which?
Yeah, the boardroom, just the room itself.
The room itself.
Yeah.
So the company, who makes this decision? These are outsiders who come and meet in that company boardroom.
Yeah, it was just a thought, because you're saying that you're looking for something which doesn't incur costs,
but you earn money.
Yes.
Okay, let me see. What I've seen maybe in some cases that company, you can have companies that essentially they offer, like as a small company, you may not have the boardroom, okay, let me call that in quotes, okay, but you don't want to be somewhere that's okay, there's like a boardroom, okay, and they are there actually in Nairobi, okay, where that is possible, okay. However, you as the person who is going to be hiring out this boardroom, okay, you have already put of the furnitures there, isn't it? The furnitures will be there, okay. You'll be making money, so there are some costs you'll be incurring, okay, as per se. Therefore, it can be an investment center, definitely, because you have purchased the furnitures to ensure that this boardroom is fully operational. Okay, yes, for sure, it can be an investment center. But I was thinking, what of revenue center, where you earn money, but there's no any expense you made. There's no expense you incur. Okay, which I can't get one. Anyway, that's the. I didn't get an example of what we call a revenue center, but they're there, okay? But I can't get an example as per se, okay? A center where the company earns money, but there's no any cost associated, okay, with the company earning that money, okay? Which I didn't get an example, okay? That's why therefore I didn't include.
How about carry?
What about carry?
Like a revenue center.
For the government?
Yeah.
Actually, does it do you carry pay employees?
Yeah.
Yeah, so therefore their costs they do incur. So it can't be a revenue center per se. But there's some costs they incur when they're going to be having these, they pay employees definitely, okay? So it can't be a revenue center. Okay, it can be a profit center in quote, okay, because they do earn money on behalf of the government, okay, but also they do incur costs. Yeah, so it can be a revenue center. Don't forget, a revenue center, it does not incur any expense. That's the problem. That's why I struggle to have a good example, okay, of a revenue center. Okay, but you can have a revenue center where they earn money only. Okay, but there's no any expense that the company incur on this department. Okay, it's simply bringing money into the company. Okay, no expense associated with it. Okay, what could it be? I failed to get an example. I failed to get an example where it's purely a revenue center, okay? Because as I have mentioned, it can exist, okay? As I mentioned, it can exist, but I don't have an example. Question on those three centers: cost, profit, and investment center. Okay, no question. I have some questions which I want us to do. Okay, I have some questions which I want us to do. Okay, so for this topic, we can stop there. We do some few questions. Okay, and these questions are on the e-learning. Okay, these questions are on the e-learning. Okay, I suppose that all of you can access the e-learning. Okay, so check the e-learning. Okay, log into your